The UK budget is due in the coming months, and given the fund's allocation of 25% to the UK, do you envisage any major changes which could affect the fund's holdings?
Yeah, I think I'll start with a caveat that of that 25%, 7 percentage points or so is Unilever, which is not really a UK company. It's just UK listed. So I'd take that out of the 25. I'd also take Ashtead out of the 25 because it's mainly a US business but listed in the UK, actually in the process of relisting in the US. So I'd take that out of the 25. I'd take 4imprint, which is also listed in the UK but is mainly a US business. So I don't think it counts.
Samero.
And Samero as well, listed in the UK, mainly a US business. You take all these out, and we're probably looking at 12% or so that is really kind of UK listed and UK exposed.
If that.
Yeah.
I think it's closer to 10 or under. And because when you say predominantly US, we are talking about 90% plus US.
Yeah.
I think Ashtead have 10% in the UK.
Yeah.
4imprint have almost nothing. I mean,
Yeah.
maybe 1 or 2%. Smero has, again, a couple of percent.
Yeah.
These are US stocks that just happen to be listed here.
Yeah. No, absolutely. But we do own some genuine UK stocks. I mean, you own Vistry, British Land, and Helical, and they are UK and UK listed and UK businesses, and they are exposed to the UK economy. So I think the problem with the budget question is that A, nobody knows what's going to happen. B, we've already learned from this government that they do something and 6 months later they change their mind. They've done more U-turns than... I do think the biggest problem that faces the UK is the lack of growth. And so when the government is struggling to make ends meet on the budget side and show a fiscally responsible kind of picture to the bond market, the biggest challenge that they have is that no amount of taxation can solve for a problem of lack of growth, because you solve the problem in the short term, next year, the year after, you're just going to have your costs go up, which means you're going to end up with this doom loop, basically. And the only way for a country to have a sustainable debt picture is to have growth. The only thing that I've heard in recent memory from the UK Chancellor that is kind of gives me a little bit of optimism is something that says we're going to go and try to reduce red tape for UK businesses and reduce paperwork and reduce complexity. And I think that is a step in the right direction. I think it's no matter what they say they'll do, the reality of the political environment is that they're going to struggle to achieve everything that they say they will do. And I really don't think they are ambitious enough in terms of what they should do. So I think in general, we try to get into situations where our downside is limited. And if things work out economically to the upside, then that's a cherry on top. And that's certainly the case with the UK stocks that we own. So we're not assuming an optimistic future. And I think if things do turn around economically in the UK, these stocks will do incredibly well. But I don't think we need the UK economy to do incredibly well for us to do well as investors. But we'll wait and see. Aubrey?
Yeah, so I perhaps don't want to get into my political philosophy too much, which incidentally is not really left-wing. It's Georgism, but you can look that up at a later time. Focusing on the actual budget, there are several things that could happen that could be very meaningful, though. One is further commitment to housing stock for Vistry. The government has already committed a huge amount of money to affordable housing, and if this were to be recommitted, if there were to be another Help to Buy scheme initiated, or if they bring forward some of that funding for affordable housing, that could be very meaningful in the short term. Anything they do on planning as well, but that can go both ways. But that's not so much budget. Then if they alter national insurance, I'm going to be worried for Johnson Services Group. But we've already had that, so I don't think we're going to get.
Yeah, I don't think that's on
anything
the table. Not this budget. At
No.
least. Yeah.
And I do get the feeling that, whilst taxes will go up, I suspect it's going to be on assets, and it's probably going to be bringing capital gains tax in line with income tax, which I think has been something that the government frankly should have done a long time ago. And that would be, to me, that would be one of the best ways of solving, the sovereign issue, but at the same time not harming growth, because obviously you can't tax your way into growth. But actually, if you tax assets, it's not going to hurt as much as income. If you tax income, that is money that people will not spend. If you tax capital gains tax, is money that they weren't going to spend anyway, or at least not in the short term. So I think those are, perhaps the key things that I'm looking out for this time round.